Assalamu alaikum wa rahmatullahi wa barakatuh, everyone. I hope everybody's doing good. I wanted to make this video just to go over the seven best halal ETFs to invest for beginners, and this list will be in order. The reason I'm making this video is because a lot of times these questions come up in the subreddit Halal Investor, and I wanted to kind of get the conversation going and share my thoughts on what I believe the seven best halal ETFs are. And again, if you think otherwise, do let me know. And if you think I am missing some good ETFs, halal ETFs, then do let me know as well, inshallah. So just to get going, before I begin, I wanted to kind of discuss the benefits of investing. Because I think it's prudent that if you're working and you're saving, it makes most sense to have your money saved in investments rather than just staying in cash. That's because also Islam encourages responsible wealth growth rather than hoarding and just keeping it in cash. And investing allows Muslims to grow their wealth over time to fulfill obligations and support their families and communities. So if you're investing, you're growing your wealth and you're ultimately paying more as a zakat, which is what we wanted to do as Muslims. And then there's the benefits of ETFs specifically, rather than just stock picking, is that with ETFs, there's diversification. When you invest in many assets with one ETF. It's low cost, lower fees than mutual funds. There's good liquidity, and we're seeing as the halal ETF space grows, there's more people buying, meaning there's going to be more liquidity. And the transparency of holdings are usually disclosed daily. And it's just more flexible and it limits your risk ultimately when you're investing in an ETF. So, I kind of wanted to go over the benefits of investing and specifically the benefits of investing in ETFs. So, coming in at number seven is ISDE, so the iShares MSCI Emerging Markets Islamic ETF. So the ISDE is an exchange traded fund managed by BlackRock. It aims to track performance of the MSI Emerging Markets Islamic Index, which includes companies from emerging markets that comply with Sharia investment principles. So getting into the pros of it is that it's a lower expense ratio is really relatively low compared to what other halal ETFs offer. It's diversified, so you have exposure to emerging markets if that's kind of what your goals are. And there's dividend distribution and as well as halal Sharia compliant. The cons is that it has underperformed since inception. I think there are better ETFs in the marketplace. There's no exposure to developed markets, which is a big risk, and it's heavily concentrated in a few countries, and there's lower liquidity compared to mainstream ETFs. So if we go to myrisk.com and you kind of use the halal ETF tool, if you click on ISDE, you can see that looking at their summary, looking at their price right now, it's $18 currently. And when I went to market around January 2008, which is almost 20 years ago, it was still $20. So there hasn't been much growth in this ETF, and I'll do a deep dive on each ETF specifically. But look at their holdings. They're really heavily exposed to a few holdings only, and they do have some diversification. But the main risk is that, like, if you look at their country holdings, they don't really have many developed markets. They're mostly in emerging markets, which has its cons because the developed markets has performed better. So that's the reason why I'm putting it at number seven. So getting into number six, I have UMMA, which is by Wahid. So the UMMA, which is a Wahid Dow Jones Islamic World ETF, is a Sharia-compliant ETF fund that offers exposure to large cap companies outside of the United States. It was launched in January 2002, and it tracks the Dow Jones Islamic market, focusing on companies that meet Islamic investment principles. So the pros is that it's Sharia compliant, obviously. It's global diversification, so you have access to developed markets outside of the US. It does have a strong dividend yield, and it's backed by Wahid, which is a trusted Islamic finance company. The cons is that, again, there's no US exposure, so you're missing out on the most dominant economy. So you're missing out on companies like Apple, Microsoft, Google, which is Alphabet. A lot of these big companies, its expense ratio fees are pretty high at 0.65%, which is above average. It is a new fund, so there's not much performance history, and it's a concentrated risk. Again, a lot of the holdings are within a few stocks, so that's a big risk as well. And then because it's new, it does have lower volume, so not many people are buying and trading this ETF, so it's pretty low liquidity. And again, if you look into using the Halal ETF tool, you can kind of see again this breakdown, and you can kind of see it hasn't really performed too well as well. Um, so hold on, it's loading. So you look at it, it's, right now the markets aren't the best time to look and do a return, because a lot of the holdings are down. But if you look at its performance against the S&P 500 over a 3-year period, it hasn't really performed well. Even over the last year, hasn't really performed well. And that's not to say it's because of the holdings or because it's not managed well. It's just because, the markets aren't doing the best, but I think their strategy isn't the best. I think their expense ratio is pretty high, and yeah, I'll probably do a more of a deep dive again on UMMA, but I put it at number 6 for now. Coming in at number 5, we have SPWO, which is by Sharia portfolio. So the SP funds World ETF is a Sharia compliant exchange traded fund that tracks S&P developed markets, excluding US and emerging markets. Launched in December of 2023, it offers exposure to 500 companies across 42 countries, excluding the US. So again, the pros is that it's Sharia compliant, obviously. Again, you have global diversification, strong dividend yield, and you have exposure to different sectors. The cons is that, again, it's a new ETF similar to UMMA, so there's not much performance history. Its expense ratio is lower than UMMA's, but it is higher than the average, or what we look to, which is around 0.5%. It's top heavy as well, so there's concentration risk, and there's no US exposure similar to UMMA, and there's low trading volume. So I put that at number 6. And again, if you want more of a deep dive, which I will go into, you can see it here, but I will also be making a video to explain why I put it at number 6. But looking at its performance, it hasn't been the best as well. Like if you look at their performance over a few 5 year, the few years it's been and the market hasn't performed the best. And its holdings, you can see, it's mostly they're heavily like the Taiwan Semiconductor Manufacturing Company makes up 15% of their holdings. So you really don't have too much diversification strategy here, and the expense ratio is pretty high. So I'll do more of a deep dive on that in another video. But getting into number 4, we have Halal by Wahid. So the Wahid FTSE USA Sharia ETF is a Sharia compliant exchange traded fund that tracks the FTSE USA Sharia Index. Launched in July 2019. It offers exposure to large and mid-cap US companies that meet Islamic investment principles. So again, the pros are Sharia compliant. It's US market exposure, so you're getting those benefits of having the Microsofts, the Googles, the Apples in your portfolio. It has a competitive expense ratio at 0.5%, and the performance has been strong. The cons is that it's limited international exposure sector, so you're really only having the US. And its high allocation to technology may increase volatility. So depending on your profile and how your strategy is long term, um, you know, being heavily involved in the tech sector may not be the best, but it has performed well. And if you're going to be in the market for the next few years, I think it would be a good strategy to have halal. But their dividend yield is lower because it's tech focused, obviously. But the reason I have it at number 4 is because of SPUS, which I will get into. And it's very similar to SPUS, and it actually hasn't performed as good as the SPUS. So looking into halal, you can get into this deep dive here on who they are on this ETF using the Marius Halal ETF tool. You can see that it's performed pretty well over a few since it's been in the market in 2019. Although now obviously we are seeing a little bit of a dip, but overall it has performed well. And again, you can see Apple, Microsoft, Meta, Google, which is Alphabet, make up the majority of their portfolio. So yeah, this is why I have it here. And then getting into number 3, which I have, is WSHR, which is the Wealthsimple Sharia World Equity Index ETF. So the WSHR is Canada's first Sharia compliant ETF, launched on May 12th of 2021. It tracks the Dow Jones Islamic Market Developed Markets Quality and Low Volatility Index, offering exposure to developed markets while adhering to Islamic investment principles. So the pros of WSHR is that it's Sharia compliant. It's globally diversified, so you have exposure to developed markets while also having exposure to emerging markets. So you get that diversification. It's a risk-weighted portfolio, so companies are weighted by risk, not by market capitalization. Has a good dividend yield and it has seen good performance. So I think this is one of the better ETFs on the marketplace, especially because of the ability to have a globally diversified holdings. And their expense ratio, which I haven't mentioned, is which is one of the cons. It is a little bit higher, but it is pretty in line with what we typically see with HLAL ETFs. Um, and then it's again, it was launched in 2021, so it does have a limited performance history, but um, looking using the HLAL MyRisk HLAL ETF tool, you can see it's performed, pretty solid over since it's been in the marketplace. Um, you know, decent performance since it's been launched in 2021. Right now we're seeing it's not getting as hit by the like the large sale, like the decreases in we're seeing across the markets because of their just of their holdings. Like you can see they're well diversified. They have Singapore Technologies, Coca-Cola, Johnson and Johnson, PepsiCo, and it's like it's not really it's pretty evenly split across a lot of these companies. They have a lot of holdings, and you can see that they have a lot of different countries in their holdings. Like they have the United States, they have Japan, they have Switzerland, Britain, Canada, Denmark, so a lot of different countries. And then their sector breakdown is pretty well diversified as well, which is why I think this is probably one of the more interesting ETFs on the market. Again, the expense ratio is what we don't like at 0.5%, and it is relatively new, but I do have it at number three. Coming in at number two, I have the iShares uh, MSCI Islamic ETF, which is an exchange ETF, also by BlackRock. Which was launched in December 7th, 2007. And again, it tracks the MSCI USA Islamic Index, providing exposure to large and mid-cap US companies. The pros is that, again, it's compliant. It does have a really low expense ratio compared to the other ETFs, and a strong dividend distribution, and it has a strong US exposure. The cons is that it's high sector concentrated, so you have significant allocation to technology sector at 45.74%. You have limited diversification, so a lot of the holdings consist of the ultimate composure of the ETF, and you have no international exposure. So you have a lot of it's focused on US companies. And just to do another quick view using MyRisk Halal ETF tool, you can see that since its inception, it's performed pretty solid. And since being launched in 2007, starting like it was launched at $19 and now it's at 65. And this is with a lot of the sell-offs that we're seeing in the market. And it has a lower expense ratio. So it's pretty similar to Wahid Halal, but it has a lower expense ratio and it has performed, it's been in the market for a while. So that's the reason why I have it at number two. And you can see that it's only in the US, but it's performed solid over since it's been in the marketplace. So I think ISDU is a good opportunity, especially if you're going to be investing for the next few years. I think, it is tech sector heavy, it is US focused heavy, but we've seen that that's how the US economy has performed well, and getting around 8% annual average return. And I think if you're going to be in the market for the long haul, this is a great opportunity for someone. And then coming in at number one is SPUS, and I think it's a kind of the gold standard of the halal ETF space. So SPUS is a US-based Sharia compliant ETF that was launched in December 17th, 2019. It seeks to track the S&P 500 Sharia Industry Exclusion Index, providing exposure to compliant U.S. large cap companies. So the pros is that it's Sharia compliant. You have your quarterly dividend. It's tech sector focused, so it provides access to fast growing U.S. tech giants like Microsoft and Nvidia. It has strong performance since inception and expense ratio at 0.49%, which is better than halals. And then the cons is that it's again, it sounds like it's also pro, but depending on who you are, it could also be a con, which is a lot of the companies' holdings are in the technology sector. There's no international exposure. But I would also say there's good liquidity, which is should be a pro. But looking at SPUS, um, it's performed well. And like if I were to group three ETFs to be the same, I would say it's SPUS, Halal, and ISDU. They kind of offer the same strategy in that they're heavily tech focused and they want to be in the US. But the reason SPUS does take their own cake is that it has the highest like if you look at their assets under management, they're over $1 billion. So they're the strongest in terms of what's on the marketplace. So there's good liquidity. Its expense ratio is at 0.5%, so it's lower than it's a good expense ratio and it has performed well since it's been in the market. So I think again, if you want to see their full holdings, you can see it using just by toggling and viewing the full holdings here. Um, so you can see that like looking at the performance, comparing it, benchmarking it to the S&P 500, it's over a 5-year period, it has done better. And this is with the sell-offs that we're seeing recently. So that's what I have at number one. And again, this is my list. So if you're also curious on where to buy these halal ETFs, here are some of the brokerages. So there's Fidelity, Charles Schwab, TD, Ameritrade, Ameritrade, Interactive Brokers, Robinhood, Wealthsimple, E-Trade. So there's a few different brokerages you can use to buy these halal ETFs, which I put here. And Jazakallah khairan for watching this video. I hope it's been beneficial for you. If you do enjoy it, please make sure to like, share, and subscribe, and let other Muslim investors know. Inshallah, we'll be dropping more content soon. So Jazakallah khairan.